I believe we are in a secular bull super cycle driven by AI, autonomous driving, blockchain, all kinds of innovation. There's so much I can't even describe all of them right now. It's a powerhouse, an absolute American renaissance in innovation. We're leading the world in everything. The world is a one-way street coming to America. And the golden goose of capitalism is the real reason we have it in America. No other country has the rule of law, patents, the innovation, the funding, the entrepreneurs, the risk takers, the capital formation. We have the deepest, most liquid markets in the world. And yeah, I think we're going way, way, way higher.
Welcome to the Rose Show podcast. So it's an exciting show today. We're here with Jim Roppel, hedge fund founder and manager, Roppel Capital Management, over 35 years of successful trading. He's founder of Roppel Report, where he teaches and shares his market views. We need your positivity, Jim. How you doing over there in Chicago today?
I am double kick ass and fired up to do the interview. Thanks for having me. And the only thing 35 years in the market says is that I'm old.
Nah, you
And
look so young.
the first several years were not successful. They were totally not successful. My wife's like, look at our tax returns. You were in the wrong business. She literally said, you got to find something else because this is not working.
Wow. Well, that gives us all hope because a lot of people, most people have difficult times in the market, especially during this chop that we've had the past 2 months. So it's the second time we're meeting on the show. I've had so many requests from the audience wanting you back. They're like, bring Jim back. So we're so excited to have you here today. You know, now that you mentioned about how you started and where you are today, what was the catalyst that got you from those bad returns to the really great returns?
Well, I think I was kind of like, first of all, I was hired by my dad's broker, and I was a cold call person, and I was a salesman. There was no training on how to trade or how to invest or how to make money. It was just go sell, sell, sell. So I had to teach myself. And the number one was when I started cutting losses because the gains took care of themselves, but I didn't have any 50% drawdowns in a name. After that, it was selection criteria. And then, evolving about what drives markets, what drives individual stocks, total addressable market, fundamentals, the correlation, the marriage of technicals and fundamentals together to learn about what my style is going to be, which is an intermediate term trend trader, that I augment fundamentals with the trend to corroborate the reasoning. And then, I was astounded. Many years ago, I had a really bad year in my hedge fund, and I was kind of whining like a rookie to my prime broker. And she's like, Jim, what are you talking about? You're already 10 years in. Most hedge funds don't make it 3 years because they don't have good money management. What kept me in the business, even after I started my hedge fund, and I didn't even really realize it, was excellent risk management. My daughter was asking me on the Roppel Report the other night, are you afraid, Dad? She interviews me. And I said, no, because I can handle anything because I'm always risk managing. It keeps everybody in business. Almost every single broker who started when I started in my rookie class is out. All 30 of them. I think I'm the only one left. I started my hedge fund and I met a bunch of other hedge fund guys. We all started together. They're all gone because nobody can deal with the bad markets, the downturns. Look, if you just cut all your losses and use amazing selection criteria, it's a game changer. You're going to have good results.
Wow.
That's an oversimplification, but that's a really good start.
It is. It's simple but not easy. And I think that's the key here. You've learned it and you implement those key strategies. So I have to ask you, when you cut these losers, is there certain parameters? How do you identify when it's a loser? Do you give it time? Do you give it a few days? What do you look at?
All right. I'm sure some of you who've seen me before know I'm a big optimist. And I think the only how about this? I live in Chicago, and at my club, play a lot of golf. there's a ton of ex traders. The ones that are pessimists are quitting the club because they can't afford it anymore. The optimists are the ones who stayed with monster winners and got rich. Okay, from the initial cost, 357, down 3%. I cut a third, 5% on the third, and it used to be 7. I'm never in a stock down 7% from the initial pivot point. Once I'm up, I do not suffocate them. I give them every opportunity to succeed. I let them run as long as they stay above the guardrail, the 50-day moving average, or within a few percent below it. Over 20%, 23% off the high is really a kind of a third rail for me. I won't really deal with much that far off the high. And I just let them go. I mean, my strong suit is sitting. That's how I achieve large gains in individual names. If you cannot sit through the inevitable 3, 4, 5 pullbacks a year down around the 50-day, you're never going to catch a 300%, a 200%, 300% gainer. I mean, the average duration of a TML is about 94, 96 weeks. How many people, the average holding period for a stock is 12 days. I mean, the essence, the definition of a true market leader is 4+ beat and raise quarters with size. You get 20% of your account in a stock that's going to have 3 to 6 beat and raise quarters. That's a game changer. You're going to be up 100, 200% on that name, or maybe more. So I'm not, look at the greats. You think Bill O'Neill became worth what he was worth because he was taking 4-point gains in stocks? No, you cannot sit. I don't know any billionaires who day traded their way there. I don't know one of them. Now I know a lot of billionaires who sat their ass down in new market leaders and rode them. I mean, how's that? Did I kill the topic?
You totally did, and you brought us.
Did I overstay the word? Did I over?
You did perfect, as you always do, and I love that 3, 5, 7, 50-day moving average violations. And that brings us right to where we are right now, the end of April 2024. We've had chop, and Nvidia, the market leader, is below its 50-day moving average. We have NASDAQ trading under 50-day and 10-week moving average. Jim, take what you just said and apply it to these true market leaders such as Nvidia and others. What are you doing?
I think people's patience and memories are short. We just ended probably the 4th worst bear market I've ever dealt with. I became a broker in 87. Just remember, it was only 24 months ago that we had a banking crisis that almost took down all the regional banks. We had Silicon Valley Bank blew up. We had 5, 6 other banks go to zero. We just started a brand new technology-induced bull market. We are 6 months in. We just started this bull market. The average 1 year in a bull market has 4.4 corrections that are so severe it necessitates a follow-through day to validate the trend up. Like Nvidia is 17% off the high. It's the greatest stock. This is going to go down as one of the greatest stocks in history. And the total addressable market going forward is enormous. The PEs, I never look at PE, but because they're growing so fast, the valuations become cheaper. If you can't sit with a stock down 17% off the high, I think people have been conditioned because it's been so good. This is exactly what we've been waiting for. I mean, my greatest years started just identical to this. I have a huge first quarter or second quarter. The inevitable digestion comes. I regroup. I've got a huge cushion. And now I throw the hammer down into the next rally up in the year, and you can have a 100% year, no problem. This is exactly perfect script. It's too good. And people are like, oh no, they're freaking out. We've got bases that are now some 5 to 10 weeks long. This is perfect. This is exactly what we've been waiting for. Everybody's like, oh, It's a lockout rally. It's a lockout rally. I'll wait for the first pullback. Well, we have it right now. And all we need is a trend change up, which we might get soon. The market's been pounded here. Again, what are we, 4% off the highs on S&P and NASDAQ? About lows, we're down 6%-ish, maybe 7. If you can't sit through that, you don't belong in the market.
I love it. That's exciting. I love that. It's a great perspective, and 100% correct. I agree. I mean, makes a lot of sense. We need to have some patience. So then I'm going to ask you, last time we met, we talked about this AI bull market that we've had, strong market. Do you think then this time period right now is just a digestion of that massive run up that we've had since last October 23, and that it's just at some point we should probably continue to go higher?
Yes, I couldn't say that emphatically enough. I mean, let's just look at the build out of the internet. If you go and you say the internet bull market started when Netscape went public, when was the internet finished being built out? It took 20 years. What are we, a year into the build out of the AI revolution? I mean, people don't even understand how to implement, let alone build it out and integrate it into your company. This is so early. If the internet took 20 years, okay, how long is it? Let's assume that we have an accelerated rate of adoption and integration. Would it be 10 years and we're a year in? Are you kidding me? I mean, no, anybody who thinks that AI is going to be fully developed it's already discounted doesn't understand history. They don't understand innovation cycles. We don't even know who the big winners are going to be. Like I said, the internet revolution was kicked off when Netscape came public. Most people don't even know what Netscape is, because the first guys out are almost never the ones who win in the end. We don't even know who's going to, I mean, some equipment companies like Nvidia, and there's some others, some of the end users, the earliest beneficiaries, the Mag 7 implementing, are going to win. But who are the arms dealers? Who's the Cisco? Who's going to tie up all, like Cisco kind of accelerated the internet build out by connecting all the computers together. Who is that going to be for AI? I mean, in the simplest terms, we are goofy early. We don't even know who the big winners are going to be yet.
Exactly. Well said. So like, let's say the shakeout we had last week, there was a lot of fear in the markets last Friday. We had Nvidia, I think, tumbled 11%, and SMCI was the big one there. It knocked down 23% on Friday because they didn't pre-announce their earnings report ahead of time. And what do you do on days like that, or that time when you get a shakeout like that? Do you look for opportunities? Is this when you decide that you're going to maybe add and for the long term, or do you just watch? Do you sit on the sideline? What do you do?
Okay, so that day made me start to believe this was something more significant than a very short-term correction. It's bordering on intermediate term. We'll see. We are not out of the woods yet. What do? I start to hedge, because I don't want to dislodge my true market leaders and my low-cost stock. I want to capture and remain with my tax seasoning for long-term capital gains rate. I don't want to dump, so I hedge. The beauty of hedging versus dumping is when I undo my hedges, I'm max long the leaders. I don't have to evaluate what's the leader. I know what they are. I'm now in them. I'm in them back again in big size, and I've already established 6 months towards a 1-year long-term capital gain. We are not okay. So I also run a lot. I always run relative strength leading screens, but when the market's going down, they stick out like sore thumbs, and that tells you exactly where to look. And the restaurant stocks like Chipotle, I think Chipotle was more important than almost anything else, because it's one of the few remaining high growth areas that did not capitulate. And had Chipotle suffered a bad reaction, the market could be in a lot graver situation. So I hedge, I start to look for the new leaders. But the first stocks that came out in early November, when we had the follow-through day, are very likely to be some of the ones that are going to get us to the finish line at the end. Now, with this new follow-through day that's necessary, we'll probably pick up a few new leaders, and we'll probably lose a few from the early cycle. But things like your Ubers, Nvidia, these other names that have held together and were early leaders, where they came out with 9 weeks in a row up off the November lows, those are likely to go the distance, at least in this cycle, in the bull trend, in this secular bull that we are in. More words than you want. I mean, I think when the AI, blockchain, autonomous driving revolution ends in 10 years or more, it's going to cap off the secular bull. So I remain in the camp that we are in a secular bull led by an American renaissance in innovation. We'll have many cycles up and down in here that are going to, I mean, look, in the internet build out in 1998, we had the global currency crisis. That in 1998, the NASDAQ fell 33% in like 2 months. That was right in the middle of the internet build out. We are going to have significant intermediate term pullbacks in this 5 to 15 year build out of AI. So I think I gave you a lot of words.
I love it.
I'm
It's
not even
great.
sure what the question is.
No, you did perfect. You answered and you went above and beyond. You know, I agree with you. There's a secular bull, and then we have cyclical little bears and bulls in between. It goes up and down. We have pullbacks, and nothing ever goes straight up, even though it's an amazing, AI is amazing and revolutionizing everything that we do and live and work. There's like little cyclical bulls in there. So it seems we may be entering a new phase. Now, how are you identifying these TMLs, true market leaders? It seems Nvidia is just going to be the TML of this whole AI bull. They have a huge moat, the biggest moat ever. They're like amazing. Their earnings were amazing too. How are you identifying these, and what are you noticing so far in some that have dropped off and some that are starting to emerge? I know VERT and VRT and Dell seem to be so strong, the data centers. What are you seeing?
Okay, you hit them all. And the clue was Nvidia was up this morning while the NASDAQ was down over 2%. It was up first. The big institutions go when they're testing a new uptrend, or they're going to go where the liquidity is. So if they're wrong, they can reverse. So Nvidia coming up early this morning was a big clue. You hammered VERT. It has a bullish engulfing candle, engulfing about 4 or 5 weeks down in one bar. It's taken all of that digestion out, and it's at a new high. Now, a negative clue was Spotify, which did the exact same thing on earnings, which I was super fired up about, and then it reversed really hard again. So that still was brought. The coast is not clear. I've unwound a tiny little bit of my hedges at this second. I am waiting for a follow-through day. The coast is not clear. It's not impossible that we could come down still and touch the 200-day. That is within the realm of possibility, which would be about a 14% pullback, which would be totally normal. Okay. I think people are getting a little too guarded over the profits they've made and not looking at the big picture. So Dell, the fundamentals of Dell is still being valued as a equipment company with a low PE. The earnings aren't quite there and explosive yet, but they are the data center server leader. And I think the upside in Dell and the patterns looks great. Anything that's holding, SFM, Sprouts Farm, and then more bullish engulfing candles like on Schwab has one. And oddly, United Airlines has one. Now, there's a lot of overhead there. I love Copang. I mean, like if somehow, I hate gap up opens. I dislike them.
Mm-hmm.
I don't love gap down opens, but I love gap downs that recover and roll. Some of the biggest moves I've ever made were there's a trade number, there's a economic statistic that comes out. The market tanks on the open and closes up 2%. Those are go times. Now I'm looking for that. I'm waiting for something like that to go to some of the names you brought up. I would like a little more digestion. I would like a little longer base, but the market doesn't care about Jim Roppel. I'm just going to follow the trend and the leaders. I mean, we'll see what the basketballs underwater can only be held by the bear so long. And when they come off and they pop up, like Vert is trying to do,
Mhm.
Copang, how the heck? Why didn't institutions sell that? Why are they buying that in a horrible tape? What do they know? The elephants can't hide their tracks.
Absolutely. I like that. Elephants can't hide. That's true. And they leave tracks behind. And we see those clues with this relative strength. When the market is red, we see which ones are less red or which ones are green. And now when the market's green, which ones are leading? Nvidia, VRT, Dell, beautiful day on those today. So let's talk about Tesla. You know, they had bad or not so great, I'll say not so great earnings. There they go, they run up, maybe because they bottomed. I guess all the bad news was already priced in. And then you have Meta last night reporting their earnings were good, and we're getting the opposite reaction. Maybe because of the capex and the investments they're going to be doing for AI in the future. What are your thoughts on all that? Is that just, you know, a short-term noise for you, or what do you think of all that?
Anybody in Tesla is not a trend follower. They don't understand. Relative strength is 11. 11. 88% of all stocks are trading more robustly. It's an absolute I mean, nobody should be in that. I'm sorry, you readdressed that question because I got so hung up on Tesla. How could anybody be in that? So I forgot
know. And that's why people are all in disbelief. Like, how did that do so poorly? And it's in bad trend and it's shooting up. And then you have Meta now, you know, selling off, having a bad day last night and then today. What's going on with the market? What is the market telling us? What for people?
Number one, Tesla may have discounted 10 years forward worth of earnings, and it could go, it's earned the right to go dormant for 10 years. Anybody who doesn't understand that is just spinning their wheels. But until the market reactions to earnings are significantly better, the market is a tread very lightly zone. Now, tonight is going to be a big night. And again, but again, Meta is recovering off the lows. We have we'll see how it closes. The Friday close is more important, but this is a go gingerly moment. We're 3 days off, 4 days off the lows in the indexes. A follow-through day could materialize at any minute. But if we have another bad round of earnings response tomorrow, you know, we listen, we could bottom tomorrow and we could bottom in 3 months. We may have to go through the summer. I don't know, but I'm just following the market. We'll see. That it is no time to, because I'm all excited. Like I could sit here and go, oh, globally, $2.4 trillion was spent on R&D last year. 30% of that was in biotechnology. Now, these people make mistakes, but all that money's not going down a rat hole. The innovation that's going to come from that and power this thing way higher could get everybody really bulled up. But until the market corroborates a new uptrend, there is no go. Don't take your hedges off. Maybe tiny little bit, take 5-10% of your hedges off. But until we get an all clear in the market, which would be a new follow-through day, great responses to earnings, or a new high in the index, powder dry, a lot of money could be lost here. I already know people who've given up all their gains from November in this tiny little pullback. If you screw around and you're jumping around, you can get chopped up pieces here. Remain calm. Less is more at this minute. It's better to do research and read than sit at the terminal and pull that slot machine arm all day trying to catch, the dead bottom. If a stock is going to go from 100 to 300 and you get it at 125, is that a big problem for you? Like if you missed the first 25 points, just chill, get a little certainty here. What if I'm wrong? What if a asteroid comes out of the atmosphere and smashes into this Goldilocks moment of, is the economy too hot? Is it too cold? I mean, the Fed, what's the ideal Fed situation? When do they have it right? When they're not raising, they're not lowering. They're not chasing anything. They're not behind the curve. They're not doing anything. That means they've got it just about perfect right at this second. Now, if they start cutting, that means the economy's slowing. But if they're raising, they've screwed up inflation. They're doing nothing right now. That's almost perfect. An asteroid could fly into our atmosphere and wreck this. I'm not deploying capital. The market's giving us a bad signal right now.
Mm.
I'm chilling at this minute, but I can change really quick.
Love that. That's important. See, this is very important for people to understand. I know at some point a few months ago, we were talking about, maximum exposure and what you do in this type of bull, and you go and you move forward, you go in, and then now we're more in that, put the hedges on, don't jump into things, chill a little bit. So I love that. This is very important. You don't freak out. People are freaking out. It's staying even, neutral, not emotional. Now, with your hedges, could you please tell us some ideas of hedging and how you prefer to hedge with your long positions?
Okay, I think anybody going into an earnings report right now without hedges on is asking to be smashed in the face. Okay, I mean, being down 15% is garden variety response right now. So you need to be either short, deep in the money calls that are 15% lower, or I don't like to buy puts because I don't want to pay time decay, premium decay. Okay. Okay. Um, it's, and I like to spread because again, if I do buy puts, I want to sell some way lower. I'm not an options expert, although I did kind of grow up in an options house. I'm going to defer on that, but I would just say you need hedges going into earnings, or you could suffer greatly. Again, I don't want to dislodge my low cost names in these stocks.
Yes.
I think have total addressable markets that are barely tapped. And you're right, Meta's earnings report, and they said we're going to accelerate our purchase of GPUs. That's why semis are so strong today. Semis are likely to capture 50% of all of the value created in AI. They are the bedrock of this whole thing, at least for now. There's another long answer.
I love it. I love it. Yeah, hedging is important. You can put collars, protective puts, and I like the bear put spreads, especially as well. You get you sell some, so you lower your cost in that. Excellent ideas there, Jim. I think that it's very important. You never know what happens during earnings. Look at Meta. Okay, so let's talk about SMCI. I remember last time we met, we were talking about that being a big winner that only happens in bull markets, that kind of action. Now it went the other way. What are your thoughts on that? Could that possibly be part of the leaders that are dropping off? What are your thoughts with that? How would you handle that? And other semis that you're looking at?
So the statistical probability of a TML blowing off and repeating is 2.7%. So there's like a 97% probability it's cooked. Again, people bring up Tesla, which had 3 climax runs. That is one for the history books. Okay. It's generally one and done. I just gave you the stat, 2.7% repeat. Doesn't mean it cannot, but it would have to really, really do some significant basing and tightening up, which is going to take time. The base that SMCI came out of was not prototypical. It was very wide, very loose. But Bill told me when Amgen, I think it was a bio, I got him, my brain's cooked right now. It was Genentech. Sorry. Genentech had a terrible, ugly, brutal base, and news came out and blew it straight up on goofy volume. And he said, Jim, that nullifies, it washes away the sins of the whole bad base, the volume and price action. That's possible, but that is, again, so rare. I'm discussing something that happened 18, 20 years ago. SMCI is cooked, in my opinion, for now. Be looking for the names that are very, very tight up here that are resisting the pullback. I don't like SMCI anymore. It's one for the books. 10Xer, life changer. If you caught it, my associate caught a piece of it for one of my funds. I love it. But it's over.
Well said. Thank you so much. And there's some people, I mean, I invested in April 22 back in the 40s and 50s. I remember I purchased that one, and You know, it's still significantly up. I mean, what do people want, right? It's over 10 times that if you held it that long. I mean, it's still trading around 790 today. I mean, that's still pretty impressive. But yeah, this is an important concept, Jim. This refers exactly to what you said about the secular bull, but then there's little secular bull markets in there, and you have leaders that start out with the beginning one and then they drop off, and then you have new ones emerge. So you always got to be watching for that relative strength there. Thank you for that. Now, what about Bitcoin, gold, the miners, Coinbase, as well as crypto miners, gold miners, silver miners? What's your thoughts on all that?
I'm a radical crypto bull. I opened my hedge fund about 6, 7 years ago. So I have cost basis so low and I have maximum cushion, wildly underrated cushion. And I believe that Bitcoin's just in a gigantic cup and handle. It's digesting very normally and healthy. The halvenings passed us about 5, 10 days ago. Normally, following a halvening, you have some sideways to down action, perfectly normal. You show me how the government is going to solve the 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 debt problem, and I'll say maybe Bitcoin's, look, the Fed is not going to pay back. The Treasury is not going to pay back all these bonds with constant dollars. They're going to have to deflate the currency. But there's so much more than Bitcoin. We're building out a digital revolution and decentralized finance, digital everything. And it's kind of like the build out of the internet. The uses for blockchain and blockchain technology are not quite, they're barely understood. I just think it's the internet all over again. I really, really do. You have two, AI and blockchain combined, gunning this economy. I mean, I was saying a long time ago, months back, I'm like, I don't believe the Fed is going to be able to cut as much because stocks were so strong. They were telling you the market was not weak. The economy was not weak. Gold had one of the most beautiful bases I've ever seen in my life. We have emerged out of there. The miners I'm long both gold and miners. I'm long. I have a whole crypto hedge fund. Okay. I mean, you got to take what I say carefully with a grain of salt, because I am drinking the Kool-Aid full blown. I'm not I'm chugging it, but I've been rewarded for it. And yeah, you just look, gold is digesting. There's something occurring. I'm not sure what it is, why it's moving. But again, I don't care. I'm a trend follower. And you see a base that big. Louise Yamada, I think, coined the term, the bigger the base, the higher in space. It's one of the most beautiful bases I've ever seen. So I'm very bullish all of them. Crypto mining, I don't like the miners anywhere near as I like the raw coins. Mining is a very difficult business. Mining rigs are basically depreciating options on the future price of crypto. You're way better off, in my opinion, buying the raw coins or speculating in projects which may turn into the next Priceline, Amazon, whatever. I mean, crypto is going to build out into a whole ecosystem of all kinds of businesses, decentralized, that are wildly superior than the centralized silos that trap our money and our content and don't pay us for it and ask us, or we have to ask them for permission to get our value and our money out of it. So there's a long answer again.
I love that. You have vision. You like see above all this short-term noise, and you can see where we're going to be existing in the future. I agree with you. I think blockchain is the future, and you're going to have all this, all this virtual reality world, and there's the metaverse, there's all that, and you're going to have the coins are going to be used, they're going to be utility and going to be used for services and goods. And monetary destruction is inevitable with the fiscal dominance that we have, massive spending, massive public debt, and we have inflation entrenched, unfortunately, but that's how it's going to be. The fiscal is going to keep fueling that inflation. And we know the purchasing power has been on a steady decline. Pull up the Fred chart. You see this cascade going straight down. So Bitcoin, I'm also a Bitcoin bull. I actually met with Swan Bitcoin CIO yesterday, Hafa. We talked about that extensively. And you're on it, Jim. I have to say, you're ahead of the curve, and you exist in this the Jim world, I guess, universe, and you can see the future with all that. And thank you for that. Now, risk management. In order to get to where we want to be in the future, to have longevity, you're a lifer in the market. We need risk management, proper risk management. Please tell our audience, what are your thoughts on risk management?
Okay, so I'm 60. I'll be 60 in 9 months. When I became early a broker when I was 22, I had no money and I had massive opportunity to take risk. So for me to go 200% long in 3 stocks was common. That is cowboy, get rich quick, build your war chest, and very appropriate for me at the time. Today, I'm in the stay rich business, but I still like to make a lot of money. For me, a max position size is around 20%, 18% to 20 to start. Now, if that doubles or triples, I've added 40% of my equity in my account. That's still relevant. If I catch 3 of them that do that, I'm having a monster year. But if I stop out on a, say some horrible gap down on 15%, I can totally endure that. So I'm in the game. I don't take positions to open bigger than, like I said, 18, 15, 20% max. And keeping my losses super small has kept me in the game forever. But that's not how I built my war chest. I used to load up big in 2-3 names, full margin, and I was trading a lot. I was in a low tax bracket. I didn't care. I was get rich business interested. And look, risk management is job one. There is no other job if you don't handle job one. That it's the number one rookie move in the whole market is not cutting your losses. Number 2, over trading. Number 3, over position sizing. And I would not really recommend, I think people might become rich quicker than I did, taking smaller positions, not grinding their emotions into oblivion with these monster volatility swings that could, really wreck your day. I would really recommend against that. I know I did it, but I think somebody could live a more pleasant life and maybe grow their money quicker if they didn't quite take the risks and the volatility that I endured. Again, I have a much, much higher tolerance for pain and volatility than most people. But again, I'm running hedge funds for other people. I have a lot of people to think about. It's not just me. I can't do that. They're not open to that type of volatility and risk. So I've got a lot of masters here.
You do. You're amazing. Thank you for that. So follow through days, very important. We're watching closely to see these days. How many do you look for? How do you find them? What are you looking for?
Well, we're set up for one right now. We're 4 days off the lows on most indexes. The Russell actually, I think, has one more day up than the others, but I think everybody knows what a follow through day is, but I think the critical issue is not turning away, keeping your buy list fresh. Like I have my Wednesday conference call with everybody. I am like giving them all my best ideas because I'm like, you got to know what to buy before the follow through day. You can't start doing your research the day it's in play. Now, when we get a follow through day, as it's building through the course of the day, you want to engage and test the positions. Allocate some money mid-morning. If volume remains robust over the prior day, mid-afternoon, you add a few more shares, percentages long. If the follow-through is rocking, we get up 1.7, 2.5% by the close and volume's going to Mars, I would commit 30% more capital right there. So again, I'm a dimmer switch. I turn it up a little bit. If I get a positive reaction, I turn it up a little more. If I get a negative reaction, I back it off. It's a process of building positions, especially re-emerging over 50-day moving averages or 10 weeks. I build my position. I treat it as it treats me. And the beauty of this whole pullback that we endured was when it initially started, we were still in a short-term uptrend. And I thought it was very reasonable to be attempting to buy shares around the 10-week. The beauty of it was it didn't go up. And so nobody really pyramided in. You didn't get your full position on because there was no positive reaction. You just got stopped out right away. So if you're getting stopped out of a opening position, it's just not that big of a deal. Now the plungers who full on load up on one, they're IO on off switch. When they get stopped out, the pain's much more severe. I like to work in and out of and build positions versus I'm not a plunger. I can build up heavy margin positions, but I build them up. I have a personal rule that keeps me from being too greedy or fearful, where I don't adjust my exposure by more than 30% in a day. That would be a giant move to reduce exposure by 30% in a day or add exposure by 30%. I'm usually building legacy positions and then adding to them coming on new follow-through days.
Love
So
that.
there's a lot of words in there.
That's fantastic. I like to scale in and scale out.
Scale it,
So
exactly.
that's it. That's great. Yeah, I like that plunger. We avoid the plunger method of all in and all out. I think that it's very important. I like the dimmer switch as well. Scale in and scale out. So okay, so taking all your massive experience that working with Bill, you're a living legend, Jim. I have to say, you're super cool and you're so much fun and very positive.
Okay, stop. Just stop.
Okay.
I am a legend. I've made all my money in maybe 8 or 9, I don't know, 8, 9, 10 stocks, all of it. Okay. Over 30 since I became a broker in 85, 87. I started the market in 85. I'm no legend. Okay. I've been bludgeoned like a beaten harp seal. Okay. Bloody everywhere. You know how you can spot a liar? I'm kicking ass all the time. Liar. The market, like relationships, humbles you. If you're arrogant and full of yourself, you're full of crap. You're a loser. Okay. Nobody goes 35 years without taking horrible pain and beatings and learning. I'm no legend. Okay. Anybody who tried as hard as I did would be way better than me. I had to touch the burner 30,000 times to learn these lessons. Okay. I catch one monster every year, every 2 years, every 3 years. I catch a monster tidal wave and I handle it right. You know how many I buy, how many waves I try to catch before I get on in big size and positioned in the right cost and ride it well? That's so hard to do. I'm no Bill O'Neill's a legend. Bill O'Neill's 15 times better than me. Druckenmiller, these guys are legends. I've done well. Okay, I've done very well, but it took 30 years. It didn't just happen. And the
you
pain
have the right mindset.
I'm never giving up. I am a lifer. I'm going to be managing money till the day till I lose my faculties. I love this. I live for it. I'm unbalanced. It's this, my family, golf, and that's it. That's about all I do.
Love that. You have an excellent mindset. You're very humble, and that's important. We all take our beatings and losses and we come back stronger. And that's it. You summed it up. Your mindset for being a lifer. So let's take all that with the mindset, risk management, and the market that we're in right now. What do you foresee? What do you think is possible for the next, let's say, 6 months, 12 months?
We're in a totally normal digestion. Its duration is fine. The magnitude down is fine. It is a little ragged in a few things. Like I don't love these truckers blowing up, but markets don't go down because things are great. Okay, there's a little storm cloud, and I think we're going to have a follow through day. We're going to have a gigantic rally, and we're going to probably have a couple more corrections. We're only 4 months into this year. All right. We're going to probably have other corrections this year. They're going to necessitate another follow through day. They're never 4.4 per year per Eric Kroll. He did the research going back to like 1950. The average market per year needs 4 follow through days to reconfirm the uptrend. This is no big deal. People have just had it so good. I believe we are in a secular bull, super cycle driven by AI, autonomous driving, blockchain, all kinds of innovation. There's so much I can't even describe all of them right now. It's a powerhouse, an absolute American renaissance in innovation. We're leading the world in everything. The world is a one-way street coming to America. And the golden goose of capitalism is the real reason we have it in America. No other country has the rule of law, patents, the innovation, the funding, the entrepreneurs, the risk takers, the capital formation. We have the deepest, most liquid markets in the world. And yeah, I think we're going way, way, way higher. You know, the average move in the Dow after a disastrous bear market's like 120%. That's just normal. That's a chip shot. That's no big deal. I'm not making a grand prognostication here. You look, the 0809 financial crisis, the internet bursting bubble, those, if you look at the metrics of the overbought, oversold oscillators, the number of new lows during the bottom of the bear market we just finished, this is the third or fourth worst bear market I've ever seen. We just ended one of the worst bear markets ever, coupled with the biggest wave of innovation we've ever seen. How high do I think this market can go? Way, way higher. Way higher. Over 5-10 years. What is going to happen tomorrow? A follow-through day? Maybe. I don't know. Maybe we have to go through the whole summer into the fall before we get a follow-through day. But you said vision. Did the Vanderbilts, the Mellons, the Carnegies, the Gates, Ellison, Chambers from Cisco, these guys sat with these monster positions through cycle after cycle after cycle. Wealth is created. Massive wealth is created by sitting. I'm not trying to scalp 3 points out of some piece of crap stock with 5,000 shares. I don't care about nickels. I'm trying to get rich, seriously rich. The opportunity right now is as good or as big as since the advent of the internet. It's bigger. There's too many innovations unfolding right under our noses. I mean, is the Fed going to cut or are they going to have to raise? If they have to raise, that means the economy's too strong. We have the Fed put in. The Fed has bullets. We're at 5% on T-bills. The Fed can cut rates if they have to. I'm just observing, chilling, waiting to pounce.
Love it. Love it. Excellent stuff. Now, please tell our audience how they can follow you and subscribe to the Roppel Report.
Twitter, I am at upticken, UPTICKEN. The Roppel Report, boom, I started writing this the date on this thing is July 92.
Wow.
So anyway, I answer all of my subscribers' questions if it takes 2 hours every Wednesday night on everything CANSLIM. I write a report that is often jammed with 80 charts, which I take notes on everything from the indexes, the leading stocks, all of the metrics that matter for implementing CANSLIM. I put it out. I try to get it out by Sunday evening. I often spend 12 hours putting it together. And then every Wednesday, I do a video podcast where I give market commentary of the leaders, the current events in the market, all pivot points, all the leaders. And then I answer everybody's questions. If it takes 2 hours, I sit and answer all of them. And it's all on video. It's all up on the website. You can see all my past podcasts and reports. Thank you for asking. You're a sweetie. I appreciate it. Thank you for having me on.
Absolutely.
The Row
Thank you
Show
so much.
kicks ass.
You're so sweet. I know the golden goose of capitalism. I love that term, and you tend to use it often. And, you know, Jim, we really appreciate your valuable insights and your positivity. You know why you're positive? Because life, there's so much to be excited about. And we have so many great things coming our way. And we're in this AI revolution, blockchain, and it's exciting times. So thank you so much.
Thank you. As long as the golden goose of capitalism is not suffocated by socialism, there's going to be another BlackBerry, another Starbucks, another Clorox, another Procter & Gamble, another Tesla. They're never going to stop coming, and they're there to change your life, everyone's life. I got to go. Thank you.
Thank you.